Good evening, TradeFlare family. Welcome to Nightly Breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. So for the key points, the first key point is going to be the FOMC meeting, and the consensus right now from most analysts is that the Fed will not do anything. The thing is the market sometimes can make you feel like stuff's going to happen right now. You got to realize there's going to be a bunch of hype for this, and there's going to be a bunch of people trying to find the rumor so they can buy or sell the rumor. The FOMC meetings only happen every 6 weeks, and they determine whether the Fed's going to adjust the monetary policy. They're going to bring up their graphs, their data, all of these things, and they're going to decide. Now, what do I think they're going to decide? I think they're going to decide nothing at this point because, Jerome Powell has set this criteria, and I don't think he's going to move away from it yet. Now remember, the Fed has a dual mandate, and it's maximum employment and stable prices. I think a lot of the focus right now is going to be on the fact that we have not had everybody return. We still have 9.5 million people sitting on the sidelines that were working before, and the Fed's taking a qualitative approach on where they think that the full employment should be. The Fed is looking to act when we have a full grasp on the whole COVID situation. I think we're going to see some optimism tomorrow from the Fed. I think they'll highlight the fact that the average inflation has stayed below 2% still, and that is the metric that Jerome Powell has been preaching. So my consensus is that the Fed will focus on unemployment. So we definitely need to be watching the rates both short term and long term. So the next key point, it ties in with all of this Fed economics talk that we've been talking about, and it's about a reverse repo crisis. And what this means is that there's too much cash in the bank. Now you may say, why is that a bad thing? Well, with rising inflation, you don't want to hold a lot of cash because it's going to decrease your return on assets. So banks don't want to hold excess cash, so they would rather do this thing called a reverse repo. This is where they give their cash to the Fed to buy some short-term bonds. This is like really short-term bonds with very low interest rates, but they really do not want to hold too much excess cash. Seeing that the banks are willing to keep buying these reverse repos is showing us that there's a lot of excess cash, because as they keep buying them, the rates will go lower. I think this is part of the Fed covering up the inflation. Because this decreases the money supply, it takes cash away from banks and puts it into treasury securities, so it naturally lowers rates. Now the reverse repos are higher than they've ever been right now, and I really want to see how this plays out and what type of reaction we see from the banks in the upcoming weeks. And JP Morgan just recently mentioned that they will be stockpiling cash rather than buying any other securities, because they think that the Fed will have to raise rates, so they're being patient. But notice how JP Morgan is the lagger out of all of the banks going into this Fed meeting. So we'll definitely be keeping our eye out on this data and see how it plays out. So let's head over to SPY and look at where we're at, where we could be heading into tomorrow. So looking at the daily here, today we closed right around where we opened yesterday. To me, this is an indecision candle, perfectly lined up for the FOMC meeting. Now the fact that we're lined up here, ready to go, ready to break out, tells me the market isn't expecting change, but what we do expect is volume and volatility. So what I'm saying is a break of these levels isn't really a break, because anything that the Fed chair might say after that break could disprove the break. So I really want to focus on the bigger levels that we have been looking at. The first one would be the 420.30 to 420 whole dollar level. As far as upside goes, if we break above today's high, I think we have room all the way up to 430 or 429.54. The market doesn't like what the Fed has to say. I think we can look at that support at 418, so we can try and play the look above and fail scenario. In that case, we're targeting the 416.50 break to fill all the way down to 410.50. As far as how we sit right now, I think everything is waiting for the Fed. I expect everything to remain the same, and I expect people to either buy on that scenario or really just stay in a range if not. So let's head over to the watch list, and the first on the watch list is ExxonMobil. Looking here at the daily, we see this rounded bottom play out. It flagged and then the flag broke, and today we saw 52-week highs. There was also new news that the federal judge blocked Biden's pause on new oil and gas leases around the nation. So this goes against Biden's plan to shift away from fossil fuels. And this would be indeed a win for oil, so I think this could be a nice catalyst for Exxon tomorrow, especially as we're looking to break out of these levels. So next up on the watch list is Twitter. I like Twitter because it has a gap to fill if it can get past this 61.85 level, and that is the old support, and as we know, old support becomes new resistance. But as it stands right now, today we took a break, and this was the same in the rest of the tech sector. As far as this bigger picture, it looks like this gap down and these buyers here at this 50% retracement level lets this thing remain in a uptrend, but at the same time time, we have still not closed this recent gap. So I think there is some room for opportunity here. Watch Twitter. Next up is Caterpillar. And this is one of the inflation plays that has been killing it. And over the past week, we sold off, and it looks like we are finding some support around the 50% retracement mark of this last relevant move. And unlike earlier this week, industrials, utilities, energy, and commodities were all up right before the Fed. Now, the recent sell-off has given us a nice dip in premium. And remember, this is a high dividend paying company, and they have a dividend coming up in July, and I don't think investors will ignore that. Now, as far as levels, I'm looking at support around 216.40. If we start to print a reversal candle or a reversal pattern like a reverse head and shoulders, we can potentially look to go long, especially because there's a lot of volume here around these support levels. If we do go lower, this thing would be breaking trend, and that could be a nice potential play to the downside. Next up on the watch list is Waste Management, ticker symbol WM. This one usually runs with the industrials or the utilities company. We debriefed on this one a few days ago, and today we saw the candle that I had mentioned earlier. We got the break of this bullish pennant. Now tomorrow is the test to see if this thing follows through. As far as this stock goes, it's a beast. It's a good long-term investment in my opinion. Are up at high prices, so we don't want to run into some overhead supply. So we want to play the break in the continuation of this pennant. So definitely keep your eye out on Waste Management for the upcoming few weeks. Next up is AAL or American Airlines. This one is a member suggestion, and as far as where it looks right now, it's showing some general price acceptance between $25 and $21. Now if you look at this trend line here, I would expect to see some support here around $22.44. If it gets the bounce, this thing could look like it's starting to put some pressure on the sellers. If we do get that bounce, we want to look at that $25 area, as we've seen resistance there before. So yeah, watch AAL. So that wraps up tonight's nightly breakdown. If you got value out of this video, show some love, hit the like button, and don't forget to subscribe so you don't miss out on a nightly breakdown or a weekly watch list. If you're looking to get in on all of this trading action, check out the link in the description below and upgrade to TradeFlare Pro. Use the code TFPRO2021 for half off your first month. Don't forget that we are not financial advisors, and nor do we claim to be. The stock market is risky. You could lose money, so use all of the information inside of these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friends.